Hello everyone, thank you very much for finding time and possibility to join us today on our next Masterclass event dedicated to cash collection. In today's lecture we will be considering two of four main methods of cash collection. We discussed last time that we are considering the topic in general, the main idea of most part of the webinars I am holding over the last year or maybe a little bit longer is to share with you, with our audience, the idea and the methodology of holistic credit management. And today we will be considering two methods, and mainly this will be the consideration and the discovery of the role of these methods in the whole process of trade credit management. So we are managing trade credit, and we need to know what's the place of each and every specific operation in this process. Pre-collection or payment assurance has its own place. Legal collection has its own place. Then third-party collection and negotiation has its own place in the same or similar way as this happens to credit risk assessment, to definition of optimal terms, to credit control, and many others. So our idea in holistic credit management is that we need to find the right instrument for each and every stage of credit management process and make sure all these methodologies, all these instruments, all these, details are working together perfectly, generating one simple result. One simple result. Sorry, English is third language for me. Which means we don't need to collect as much money as we want, whatever paradoxical it sounds like. We don't want to get blood out of stone to collect any amount from anyone. Philosophically this is impossible. The objective of this work is to simply make sure that our customers do only three things: buy from us, pay for what they bought on time, and order again. There is nothing else we want. We just want to spin this cycle, as long as it is possible. We need to spin and generate as much profit, as much profitable sales for our company as it is possible. This is the prerequisite. And in this light, in this view, the process of cash collection is not about collecting cash. It's about making our customers pay on time, without actually being too optimistic, thinking that every customer will pay in time and everything gonna be all right. No, that's again not possible. Therefore, we credit managers, credit specialists, everyone who is involved into the difficult job of managing trade receivables, sometimes even trade payables, we are able to correct the situation. If customers don't pay, we need to enter, we need to be able to collect, and in the end of the day, it's our job, and we are expected to convert virtual companies' revenue in books into the real cash on the bank account. So let's not forget about that, let's be clear about that. So today we continue the previous lecture, which was dedicated where we were considering the methods of cash collection. So today we will consider two of them. We will consider payment assurance, or things which are happening before due date, as you can see on the slide. So we start from the payment assurance, and we will consider dunning. Again, it's not the idea to share with you all the detailed information or like pretend I know the business you work in better than you are. I don't pretend I'm able to do that. I need to know your business in order to give you any advice. That's absolutely normal. So the main idea for me, main objective for me, is to share with you the main underlying principles which are governing both of these stages, and the same will be for the negotiations, and the same will be for the third-party collection. Another objective for today's lecture is to show that collection of cash is also multi-phased process. So it will be incorrect to say, but these are the things which I hear many times, on social media and in other places, like in articles, like, okay, collection is negotiation. Look at this scheme. It perfectly confirms that negotiation is only part of the cash collection process, and very, very small part of the whole big process of credit management. The same story for dunning, the same story for assurance. And if by any chance, sometimes we hear from the advertising that, automation of reminders is the thing which is changing overdue outstanding. I was working on this slide for quite some time, using all of my experience. And you see that in best case, dunning takes some like 25% of the whole collection process, and significantly smaller part of the whole credit management process. So, but this means that we need to perform dunning in the best way we can. But we should never try to stretch either dunning or payment assurance or negotiation or third-party collection, to stretch it to the size that it is able to replace the whole collection process or credit management process. My right hand or my left hand is not me. Yeah, whatever important it is. The same story for the head, by the way. The same story for the credit management. So please bear this in mind, that each and every sub-process, each and every method we use, supposed to be a perfect part of the bigger process which we work with. Okay? I will share with you two main underlying principles for the payment assurance and for the dunning, which they are deriving from if you follow my publications, you might notice that there was a publication, like I think last week, 5 simple principles of cash collection, where just like 5 simple things, which it's not like I've created them. I've read them in the credit management book written by Glenn Bullivant. So I'm just trying to, to spread that knowledge around the credit practitioners. So first, very simple principle of payment assurance is that the client should know what, when, and how much to pay, as well as the consequences of delay. Whatever simple it sounds like, this means that merely we're supposed to have absolute common understanding of the accounting records first of all. That's one of the very first thing which people learn in accounting, that all records in our sales ledger are supposed to be like mirrored in the customer's purchases ledger. So there is no discrepancy. There is no one single discrepancy in that. So we need to make sure that our records are corresponding to each other, there are no mistakes, and we equally understand the same thing. If you learn holistic credit management with us, if you've seen that, this job starts even earlier when we align payment terms, when we align the terms of credit with our customer. So we clearly understand, and we equally understand together with customer that, you know, the due date of each and every specific invoice is like this. Yeah, when we ship goods on the 1st and customer receives them on the 1st, and we have 30 calendars payment term, we got a due date for January 1st. As a date of shipment, we will have January 31st as a due date. And there is no discrepancy on that, because late payments happen because of this as well. Quite simple. So if we want our customers pay on time, and this is our main objective, to make our customers pay on time, we need to start from the right place. We need to be clear with the customer. There should be no different views on when this or that specific invoice is to be paid. If there is a discrepancy, I get you back to that publication, and this is one of the golden rules of the payment assurance and cash collection. Resolve all disputes before the due date. If you have disputes which are unresolved before the payment falls due, don't be surprised you have overdue, and you will never have chance to reduce it to zero, which is actually expected. With regards to dunning, it's another very simple principle. The earlier you ask, the earlier you get paid. We know that each and every single case of overdue is eating into our company's profit due to the very simple reason: money in time costs money. So use of money costs money. I mean, working in credit, I do believe you are certain that $100 today and $100 tomorrow is a different amount. So the earlier you ask, the earlier you get paid. In case of overdue, our strategy or our course of action is to be aimed to make sure, or to do everything we can, reasonably can, to get our money as soon as possible to our bank account. It's not always possible, it's not always as easy as I say. It's always, I mean, to be reasonable, it's always easier say than do, but this is our objective: to get paid, or to reduce, I mean, to collect the outstanding amount as soon as possible, just because we understand that if customer owes us today $10,000 and pay 1 week later, this means that this is already not $10,000, this is already less. Okay? So what can we do about that? Obviously, we have something to do before the payment falls due, and we have something to do as soon as the payment falls due. So today, in today's lecture, we are considering actions and principles which help us to work with customer payment around due date, if you wish. This is the section of the process. This is in this stage. So when we go and when we consider payment assurance, in our methodology, in the methodology I'm sharing with you, the payment assurance is everything which happens before due date. If you remember the previous slides and the very first slide we discussed today, assurance is something before the due date. First of all, we need to make sure, as I said, the prerequisite, we need to make sure that all our records are correct. There is no discrepancy. Discrepancies happen due to whatever reason. Sometimes a bookkeeper just, made a mistake in the accounting record, or whatever any technical record done by automated process, whatever it is. If the records are inconsistent with each other, we might have due date. But even before that, we normally consider penalties and incentives. With very, very warm feelings, I recall my times when I was studying for a Chartered Institute of Credit Management qualification, and I remember the course. That time it was called Introductory Credit Management, and I think on the second page, just like after the preface, after the introduction, there was an article explaining penalties and incentives, actually impact of late payment penalties and early payment incentives on the collection process. It's a quite big, interesting topic. Today we will only touch it. Where we normally find it, penalties and incentives normally are reflected in the contract, in the text of the contract if you have a written contract. Your company might have standard T&Cs, or terms and conditions of trade, which you send to your customer, and customer is supposed to correspond to them. Again, you need to make sure that customer have read and understood them clearly, and they agree with that, because terms and conditions actually constitute the provision of the contract. And if there is like controversy between you and the customer, then you need to be clear about that. Incentives, again, could be part of that. Like sometimes this is these are the payment terms written in the contract, or communicated in a different way with the customer, where client has the right to a discount if they pay earlier. This is quite common in the region DACH. In some other countries, you need to be, however, using them, both actually, penalties and incentives. You must be clear that there is a common understanding how they apply. Because when we speak about the penalties, and when we speak about like as a consequence of the late payment, you need to align with your client. You need to align with your client what is considered as a late payment, in which situation. Because when you treat with the penalties for late payment, which might be a serious, sometimes they are serious, you need to be sure that customer agrees that this is the late payment. Because I give you an example. If you have a dispute and then customer pays late, and this dispute happened due to mistake made on your side, just like late delivery or delivering of the wrong goods and you know, something other, like sometimes happens in the practice, and then you calculate, or you calculate and then send additional bill for the late payment. Well, this will be not very welcomed from the customer, and together with your additional efforts, your efforts required to collect the outstanding debt from the customer, then you have to add additional effort to collect the penalty, and this will be extremely difficult if customer disagrees that this payment is to be considered as the late one. So I believe you understand. I mean, quite simple principle of collection. Before asking for money, you need to perform your part of the contract. Otherwise, it will be impossible to collect. And if you don't believe me, don't need to believe me actually, you can simply look at yourself whether or not you will pay somebody who didn't perform their part, who didn't deliver what they promised. Yeah, imagine you ask for, I don't know, you ordered something on the internet, and this is like with the kind of payment terms or whatever, and then the goods didn't come on time, and then you receive a bill which asking you to pay. Well, are you happy to pay for that? No, it's absolutely clear. So calculation of penalties is to be done quite consciously. Another important thing, and I promised that there will be a series of publications dedicated to this topic, you need to be sure about the interest you calculate. I was absolutely negatively surprised to know that, some big number of people, even in credit profession, is actually not aware of what is usury, what is the enormous interest applied on the late payment, or as a penalty. Because in most part of the countries, in Western Europe, in United States, usury is out of law. And normally there is a limitation for the interest rate which could be applied on the late payment. For example, in Switzerland, where I live, this interest is 5%, 5% per year. But nevertheless, there are companies who are trying to apply penalties equal to the amount of a debt. Obviously, such an attempt is illegal. So when you calculate penalties, you need to be 100% sure that you are calculating the amount, or you're applying a penalty which corresponds to the legislation, because otherwise first of all, this will damage your relations with the customer. That's one thing. So before calculating late payment interest, you need to be clear that you got either consent from your customer side, or the law is on your side, or you are on the safe side. And Second thing, if you try to apply an interest which is higher than permitted by law, you are standing on that weak ground, where your requirement could be found illegal in the court. That's another thing. So again, calculation of late payment interest is good to have if you reflect it in the contract. It must be written and understood by both parties. However, you need to be just careful when you use it. The same story with incentives. Well, incentive itself could be good instrument, especially if you if you need to solve temporary cash flow issues for your company. Like, it's okay to, I mean, if you face a difficult situation, your company needs cash flow. In my practice, I was using that from time to time when there was a need. I had a budget provided by my CFO. You know, I was calling customers like, okay, can you be asking if they can pay us a little bit earlier against the additional discount, or you know, any other cash incentive to which they end, because like if they have spare cash. This was working. Negative side or negative example of application of earlier payment incentives is when customers, especially with automated terms, like if they, what often happens, like there is a payment term, like pay if you pay before the day 10, you got 2% discount, and then it is net if the customer pays on 30th. What could happen is that customer pays on 30th day of the payment term, but still deduct earlier payment discount. Then this creates an issue on both sides. You need to clarify that. You need to explain this to the customer, and so on and so forth. Especially when this is like systematic practice, you need to be careful with that. So again, you need to communicate, and one more time communicate with your client in order to make sure you equally understand what's supposed to happen. Sometimes this could be even subject to contract review. This could be the case. But again, this is not like a sharp instrument which you can use only on your side, and simply, you know, calculation of penalty or an incentive means nothing unless customer pays them. This is just it. The second instrument of payment assurance is actually magic account statement. Why I say magic? Because I've seen many examples in my professional practice that how account statement was changing actually changed the significantly reduced overdue, simply in a way we said earlier, because it helps enormously to make sure that quality of records on both sides. Here on the screen, I was yesterday, by the way, and you know, whatever powerful this instrument is, yesterday I did a bit of research on LinkedIn. I was trying to find for you an example of good account statement. And actually I failed to find good example of account statement, therefore I had to use the old one I found several years ago. It was like, I think in 2013 or 14 I found this nice example. So what is the idea behind the account statement? Account statement is our way to communicate to our customer our version of the account, our version of records. And the idea to send it to them, to share this information and ask them to confirm if everything correct, or highlight what is incorrect. Therefore, we need to share actually two parts of the information. First and most highlighted thing is a balance. Very fast prerequisite. If we say that outstanding amount due to us is 100,000 sharply, then customer looks at their balance and understand that, okay, if this is again 100,000 sharply, that's okay. If there is a discrepancy, even in 1 cent, there is something wrong inside. And the bigger the discrepancy, the bigger the problem. The good thing and important thing for us is that the earlier we know about that, the earlier we can take action and correct. The principle resolve disputes before due date saves tons of money and removes, like could remove, like from your agent report, about 50% of overdue, because enormous part of overdue belongs to disputes. And to the situation, it happened in the situation where we only become aware that we have a dispute when customer, delays the payment. That's the biggest problem. We start working on overdue, which we were able to prevent very often, quite easily, but only in case we're aware of it. But if we're unaware, there is nothing we can do without that. Customer delays payment, and then we call them, we go with our done-in process, and then we receive first reply from the customer, sometimes in a week after overdue, sometimes even later, and customer said, sorry, we cannot pay because we don't have documents or whatever. And then we start to correct everything, but we already in delay, which means we already lost money. We already lost money, and we will be continue to losing them until we resolve the payment and until we send right documents to a customer who will pay in the end when they receive the right documents or the right goods or whatever reparative action is necessary. So what else can we share in the account statement? As you can see here on the slide, important thing is sort of agent, actually list of invoices. I already mentioned that there is a due date, which is important, then type, then reference, then amount, the remaining amount, if something like that. As you can see, we have a point where amount due or balance. It's not that much different from the invoice. What else you can do in your account statements? You can either color with red or highlight with some bright color the invoices which are in areas which are already overdue, and highlight them. What is missing on this account statement? Very good to add here your payment requisites if they are missing, like on your invoice, and kind of text saying, like, if you see any, please we would like to draw your attention to the invoices in areas. Can you please check their status in your book and pay them, and please contact us back if you see any discrepancy, if there is any disagreement. And then you need to add contact details of a specific person who to contact, and please make sure that person who will be contacted by the customer is the one able to take action as soon as possible. So make sure this is the right contact. Following with the idea of the contact details, it's surely not the best idea to send an account statement to to a CEO or CFO or somebody in the company. The best way, like with invoices, and normally this is supposed to be the same person whom you send invoices. send it to the right person and make sure this person receives it on time. Receives it properly, and this is the right user of information. The same story, as I said, as with invoices. My additional advice on that: don't worry to annoy. So, like, obviously this should not look like I don't know, sending account statements every day, but once a month, especially after the month closing. So 12 statements a month is absolutely great. I mean, depending on your business, sometimes even weekly account statement would be okay if there are discrepancies. Sometimes if customer requests them, please be ready. This is your part of customer service. Be ready to provide it, like share the data with your client. And maybe one final use of account statement which bridges us to the dunning process. If you need to communicate the outstanding or late payment to a customer, the best way is not to send them a letter about one single invoice. Especially if you are in a situation where you deal with the customer every day and you ship to customer, you receive payment, so on and so forth. When you communicate one invoice, okay, this is good, you highlight your problem, but it's not that much effective. To be more effective, to be really effective, you just send an account statement with the whole situation, with a holistic situation, again holistic credit management, if you see it, and you share the information about the whole account, so customer has a look, double checks, and prevents issues, which help you to prevent issues which might happen in the future. So you go with the complex solution with the customer. So I can confirm with my personal practice in B2B collection, when you write an email to a customer reminding them about the late payment and attach account statement, it works absolutely great. Numbers I've seen on the portfolios under my management is that implementation of account statement help you to reduce, depending on the situation, from 10 to 15% of the overdue easily. And especially if you manage to automate this, like you push the bottom, I can confirm that most part of the modern ERP systems are capable of creating tailor-made account statements. We automated that in SAP without involvement of external consultant. We did that within our credit team. It was working absolutely perfect. 1 minute to prepare everything. Make sure you close accounts, you applied all the payments to all the invoices, and then like first day or second day of the month, you send account statements to all your customers, and you're absolutely great with that. And trust me, most part of accountants, I can tell you that from quite long period of accounting career within my family, every accountant is happy to receive confirmation to double check if all their records are correct, because everybody knows that mistakes in accounting does not make anybody happy. So you are helping them, then in return you receive communication, which is always important. And account statement as a part of this process leads us actually to reconciliation. The process of reconciliation is, well, let's be very clear. let's give things their true names. Reconciliation is monotonic. It's a job which no one likes. However, knowing, I mean, for us, people who are responsible for overdue, people who are who has to collect, who has to waste, and who has to sometimes, get blood out of stone to collect that cash. When we understand that this reconciliation prevents us or helps us to reduce the efforts dedicated to collection, which is surely not the most enjoyable, most pleasant work job in the world. To me, like, convincing somebody to pay is actually harder and more difficult and less pleasant work than reconciliation. So each time there is a discrepancy, dedicate your time to reconcile accounts, find discrepancy and eliminate it. Again, discrepancy in accounting records is a kind of dispute. Therefore, the earlier you remove the dispute, the earlier you will get paid, the better job you will do. I don't believe it's right time to explain how to reconcile accounts. I believe the job is quite basic, and again, if you don't know how to do it, speak with any experienced bookkeeper. They will share with you tons of advices how to reconcile accounts. Ask ChatGPT if you wish, whoever else. I do believe there are ways to do that. Account statement would be good help for you. And we are heading forward to the dunning. Dunning, or sending reminders, is an important and one of the well-known basic parts of cash collection process. By its definition, it's a communication to a customer. And on the earlier stages, and because this is quite early stage, normally when we speak about dunning, we are speaking about 1 month. And very often this is like 1 week. Depending on the business, depending on the traditions and customs on the market and country and jurisdiction. Normally, the idea behind it is simply to communicate, to let customer know that they are late on this or that invoice or this or that payment which is due. So there are several quite simple, quite obvious rules which I will simply mention. First of all, you need to have proper contact details of the right person, because you may send thousands of messages, tons of emails, letters, waste paper, everything, and if the person who is responsible for taking a proper action about your payment is not receiving it, it's waste of your energy, waste of all the resources you used for the dunning. So dunning, whatever way it is automated, or whatever perfect way it is done, is actually based on the simple principle: right person receives the right message and takes the right action, right corrective action. So master data of the customer, contact person, is a prerequisite. Right message Again, the situation could be different, and the important part, or the important thing we need to know about the dunning is that this is one-side communication. We simply let our customer know that they are late. And we may also invite them into the dialogue, but by its definitions, as dunning is a reminder, we simply let them know. And if they are getting back to us, then this will be already kind of negotiation and kind of clarification what happened. But the main idea, we simply send a message, and the best way we want our customer to answer it is quite simple. We want them to pay. So we send a message to a customer and receive and expect their reply on our bank account. And if we got a reply from them, on that mode of communication, this medium of communication we used, this means that we already go into the negotiation, which will be on our next lecture. However, the idea of dunning, I will repeat it, it's quite simple. So we send a message and receive a reply on bank account. As simple as that. There is no right answer to a question which medium, which way of communication is the best. Because this everything depends on actually on the way your customer wants to receive such kind of information, the way it will be helpful for them, and the way they are, which makes them to take necessary corrective action. This could be either, any type of 1,000 or thousands of existing messages, like either it is WhatsApp, either it is whatever. This could be email, this could be a letter. Depending on what you agreed, and depending what works. It could be letter, normal letter sent by post. Again, sit and calculate how much it costs you. Because, as I mentioned, dunning stage is just communication and payment. Communication and payment, communication and payment. This is it. The tone of your communication especially on the earlier stages, like this is first day of overdue, should be quite friendly, because as you remember first slide, on the stage of the dunning, we are still dealing with the client with whom we presume, or in the major part of the cases, we are planning to continue to work with. So we're supposed not to treat them as a debtor, we're supposed not to damage our relations, we're supposed to be friendly. You say, not using like you didn't pay this our invoice and so on and so forth. No, we didn't receive your payment. Can you please check the status of this invoice in your books? Can you please get back to us and explain the reasons? Or like, what can we do if this is the something connected with mistake on our side, please communicate it back to us. Again, coming back to account statement, when you already communicated all the necessary data to a customer and they know, they check their account, your dunning is already coming to the right person and your dunning is already addressing the right issue. Yeah? And if there is something, they come back to you. Dunning supposed to, in terms of text, in terms of content, it's supposed to always bring necessary information about the action, what action you expect, and it's supposed to bring a way to communicate back. Like, similarly, or actually in the same way as it is done with account statement, your communication is supposed to be absolutely clear who to contact. This is a paramount, because I do believe you got your own, many of you got, your own luxury of experience with collection. And most of you, and you know that successful collection of an outstanding debt is actually based on the simple thing: we need to maintain dialogue. So if everything's okay, if customers simply forgotten to pay, they will provide their answer on bank account, or simply say, okay, sorry, we forgotten to pay, we will receive, you will receive our payment, or we already made a payment, and so on and so forth. Yeah? But if something wrong, if you need to enter into negotiation, you better maintain dialogue. Regardless, they will become debtor, or you don't want to work with them anymore, and so on and so forth. But even in the case of a debtor, you need to maintain dialogue in order to collect. Otherwise, the worse the communication becomes, the more difficult it is to collect. The more difficult, the harder it is to reach the agreement of a specific payment, and so on and so forth. There is also an idea, actually two ideas about the dunning I would like to share with you, and just to share with you my opinion about, is whether or not it is practical or helpful to send what is called pre-dunning, or send dunning before the due date. There is no one simple universal answer to that. I know some practitioners who are very successful with that, who say, well, customers sometimes even grateful to us that we are reminding them about the coming payment, like payment falling due tomorrow, or like day after tomorrow. If this works, and if this is perceived by your client in a positive way, they are happy with what you do, please continue to do that. Please continue to do that. If it works, don't change it. If you try to do that, if you try to send them emails like, here is an invoice coming, please confirm you pay, and you see this is not bringing you any additional value, it is either ignored, or if you do that via the telephone call, this might be, if this is perceived in a negative way, you better refrain from it. Because I can tell you, in one of the teams I work with, a salesman was speaking with a client and he said to the business owner, you have a payment falling due tomorrow, will you pay? And the client said, do I look bad? Is there something wrong with me? Why are you doubting my ability to pay? Well, you see, the perception could be different. Sometimes this reminder or pre-reminder of earlier payment, of coming payment, could be perceived in a positive way and found as a part of the service you provide. If this is so, perfect, please continue. Whatever makes sure customers pays on time, you do. Provided that it doesn't bring you additional unnecessary expenditure. Second thing I want to discuss is actually that stereotype, or common belief, that the more reminders we send, the lower overdue we have, which is like two completely unconnected things. Because I mean, in the light of all the information I shared with you above, mere sending reminders does not reduce overdue. You need to send right reminders at the right time to the right person. And actually, reminders or done-in letters only work good and provide good result when they are part of the well-organized credit function. If your company simply have if your company simply has enormous overdue and you start sending reminders without understanding the underlying causes, without reconciliation, without all the other things, they will never change in the situation. Maybe like if nobody was taking care of overdue payments at all for years, and then there is somebody who came to the company and started sending reminders, this might add some situation. But best way to use dunning is to put it into its own proper niche of credit management process and use it properly. So mere automated dunning does not change overdue. Well, I said this could change an overdue, but this will never be a real dramatic change of the overdue reduction. Yesterday, in preparation to today's air, we were speaking with Karel de Bosch. Karel, thank you very much for helping me. And there was a question about the use of AI. Artificial intelligence. I just wanted to mention a short summary of that. First of all, if you need to make sure that you are using the proper language of done-in letter or correct your mistake or whatever, artificial intelligence is one of the best in terms of language, especially in correcting my very far from being perfect English. It is more than great. Yeah? Again, don't believe that emails created by artificial intelligence will reduce your overdue. This would never happen because it's just a communication. And all the other automations, like when to send and use it for the analytics, like when it is the best time to send a letter. What's the right time for that? And all the analytical capabilities would be absolutely good to use. The main idea would be just to say that I just want you to make sure that at the same time, please verify the results. Verify the results that your artificial intelligence brings to you. Simply verify them and be careful about what you get from it, because sometimes artificial intelligence generates the results which are, let's say, a bit far from the common sense. We are coming to the end of today's lecture. I thank you very much for your patient attention, and I just wish every one of you the highest possible sales, the lowest possible losses, or as we could say it in French, bon crédit. See you next time.